In today's episode, we are going to talk about unfiled tax returns. But I want to focus on the IRS statute of limitations on unfiled tax returns. You see, as an enrolled agent, it is my job to advocate for you as the taxpayer to make sure that the IRS does not violate your Bill of Rights.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome to episode 72 of the Tax Relief with Timalyn Bowens podcast. In today's episode, we are going to talk about unfiled tax returns. But I want to focus on the IRS statute of limitations on unfiled tax returns. You see, as an enrolled agent, it is my job to advocate for you as the taxpayer to make sure that the IRS does not violate your Bill of Rights. Okay? Now, if you aren't familiar with what those rights are, there is an episode on this show where I go over those. So you have the right to appeal. You have the right to due process. Okay? So part of what I do in advocating for you and making sure those rights don't get trampled is also making sure that you understand the rights that you have. There's a lot of information that goes out on social media that can confuse the taxpayer if they don't know where to search for reliable information. And that is why I want to make sure I get this episode out to as many taxpayers as I can, because we're coming back from a government shutdown. The IRS has been understaffed. They got some staff back, and they are going to be going after the low-hanging fruit. If you are a person who has not filed your tax returns, there is a simple process that they can go through which will create a substitute for return. Now, in this substitute for return, they'll take the information that was given to them through third parties, so your employer, that Robinhood account that you have, that Cash App account that you do trading on, and they'll create a tax return. Now, when they do that, they are going to put you in the tax bracket that is most opportune to them. So let me give you an example. Let's say that you are a business owner, okay, and you receive 1099s and 1099Ks from the work that you do for other people, companies. You got them from Stripe, PayPal, what have you. Well, the IRS, if you haven't filed your return and they do that substitute for return, they're going to take that document and they're going to assess tax based on that. Now, if you're a contractor, even if we have you in as a wage earner, there are typically going to be deductions that you have to lower the amount that would be taxable. So, for example, if you are an employee and you have an HSA, you have a retirement account, that's traditional. Those things could lower your tax liability. But if the IRS has to create the substitute for return, they're not going to take those things into account. Same thing for my people who are self-employed. They're not going to factor in or estimate deductions for you. So you're going to be taxed at the highest income point that's been reported to them. But then in addition to that, if you have children, they're not going to add those children. So you won't get the child tax credit if you're eligible. They're also going to assume that you are filing as single and put you at that rate, even if you're married. So it does not work in your favor to have the IRS file a tax return on your behalf. But They will. Now, with that being said, and we're talking about unfiled tax returns, you are legally obligated, if you need to get into compliance, to file the last 6 years of returns. Now, if year 4, 5, and 6, you were due a refund, you could get out of filing those because the IRS understands that the refund statute expiration date is passed. So, just like there are limits on how long they can collect from you, assess tax, you only have a certain amount of time to claim your refund. So it's generally 3 years from the date that the original tax return was supposed to be filed. Okay, so let's say your 2021 tax return was supposed to be filed in April of 2022. Well, that means the last day that you could claim a refund for that 2021 tax return would be April of 2025, 3 years after the original due date, or 2 years from the date the tax was paid, whichever one is later. Okay, now that's why you could get away with not filing 4, 5, and 6, but that doesn't mean that they only have 3 years to assess tax on you. So they can assess an additional tax if you filed your returns up to 3 years from the date of the filing or the due date. And this is another situation where it's whichever one is later. If there is a substantial amount of income that is missing, or it's under because there are frivolous deductions and credits, so if it's over 25% of the gross income, they have 6 years to assess that additional tax. Okay? So 3 years if nothing crazy is going on, 6 years if there's substantial income omissions. That is if you file the tax return, though. If you haven't filed the tax return, per the Internal Revenue Code, the IRS has no limit on when they can assess the tax to your account for that year. You want to make sure that you don't give them an open invitation to come in and assess the tax. Because here's the thing. If you don't file, I just shared, they indefinitely can come and assess the tax at any time. If you were to file it, they have 10 years from the date that the tax is assessed to collect the tax owed. This is what we call the CSED, the Collection Statute Expiration Date. Now, with this in mind, you may be thinking, well, I'll just take my chances. Why would you leave an open invitation when if you file the return, you know how much time you're dealing with? And if you're a listener to this podcast, you also understand that you have options to handle the debt if you can't afford to pay it, right? Episode 10, we talked about installment agreements. We've talked about the offer and compromise and how to qualify for that. We've talked about currently not collectible. If you have a tax debt that you can't afford to pay, the IRS will work with you, but you have to communicate. If you're anticipating a tax debt and that's why you've buried your head in the sand and you don't want to get these taxes handled, listen, you're not alone. You're not the only person in that situation. And there are people just like me, whether they're enrolled agents, CPAs, or tax attorneys, who are more than equipped to help you get caught up with your filing and then also help you set up a payment arrangement. Okay? So back to the question we started with. How much time does the IRS have to assess tax on your account for a specific tax year? If you have not filed those tax returns, they have an indefinite amount of time to come in and assess the tax. So why not take control of the situation and handle it first? Now listen, if you're in that situation right now, I want to take this time to invite you to book a call with me at bowenstaxsolutions.com. First things first, before transcript investigation or anything, we really need to get those taxes filed so that we know what we're looking at and what we're up against. But note, I'm saying we. Again, you're not in this on your own. And together, if you're a good fit to work with me, we can handle it and take it out. Okay? Now, if you're like, Timalyn, that sounds nice and dandy, but what if I don't qualify? What if I don't have any money? There are low income tax clinics for people who earn under a certain amount of money who would be able to help you. If we don't vibe together, there are other tax professionals who are out there that can help you. See, the thing is, it doesn't have to be me, but I want to make sure you get the help you need. And in addition to that, not just you, your family and friends as well. So if you found this podcast episode insightful, if it gave you some hope, you can see the light at the end of the tunnel now, will you please do me a favor and like this episode on whatever platform you're streaming it on? And if you would share it with friends and family, that would mean the world to me, because 1 in 50 taxpayers is experiencing a tax issue with the IRS, but nobody is raising their hand to say it's me. So if you help me share this on social media, somebody who sees it across their timeline is in need of the help that's in this episode, and you can help them get it. All right? So, hope you found it helpful. I will see you guys in episode 73. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.